I'm Corbett Wall with DV Auction, here with your feeder flash for Monday, May the 23rd, brought to you in part by Joplin Regional Stockyards. Expecting 6,500 head for today's feeder cattle auction on Monday. Now they are going to be closed next Monday for Memorial Day. A lot of times they don't close on those type of Monday holidays, but they are going to be closed on Memorial Day, so be sure and mark your calendars for that. I saw the guys from JRS, Joplin Regional Stockyards, over the weekend on Friday. We had a good talk with some guys from Specialty Risk on LRPs at the 4th State Farm Show there in Pittsburgh, Kansas, and enjoyed visiting with those guys and putting on that short presentation. Cattle on feed disappoints on Friday. I'm not going to say it was terrible, because it wasn't. But we kind of felt like we were due a bullish cattle on feed report, and we didn't get that. A month ago it was pretty bearish, and we thought, well, surely we'll make up for that this month. Well, we didn't quite do it, and so I don't really know that you could call it bearish. It would be neutral, kind of leaning towards the bearish side, but not terrible. But guys, get ready, because we're going to get to the point here within a few months that these placements are going to be plunging. Now, if the average of the analyst guess is that low, then I guess they won't help any either. But it will open the eyes to some of these traders and investors and managed money and things like that, and it's going to help our feeder cattle futures a whole lot. Feeder cattle futures had a terrible week. Had a terrible last 2 weeks, down over $10.50 the last 2 weeks on your August feeder cattle contracts on the CME. Those are all important because kind of hinges on the price that the guys get for those mid and late summer yearlings coming off grass. But the cattle on feed report to come out on Friday afternoon had May 1st inventories at 102.0. compared to your average of analyst guess at 101.5. So that's not terrible, and the only change was on your placements there. The placements come in at 99.1 during April compared to 96.5, which was the average of the analyst guess. Now marketings come in at 97.8, and you think, well, that was terrible because it's that much lighter than a year ago as a percentage wise, but we had one less day of marketing, so that offsets, and actually your average analyst guess was only a tenth of a percentage point away from that, so that was pretty much washed. So it was fairly neutral, kind of leaning towards the bearish side, but we kind of figured that we were going to be due a bullish one. But you go looking into that report and seeing what's going on, your placement numbers, Iowa, Kansas, and Texas were all lighter. Iowa at 86% of a year ago. So a lot of those farmer feeders may be deciding they'll just sell that corn, and they're not going to put cattle on feed and feed it. But over in Nebraska, it was 104% of a year ago. Colorado was 103% of a year ago. Kansas and Texas both in the upper 90 percentiles of the placements of a year ago. But your placements in April were almost 10% lighter than just the month before, March, which is expected, but just thought I would mention that. But what else went on last week, except for the feeder cattle futures being down every single day, and your cash markets and your feeder cattle clinging steady early and then plunging lower? Well, the Meat and Poultry Special Investigator Act was marked up by the U.S. Ag Committee, or U.S. House of Representatives Ag Committee, and we were kind of surprised that that happened. But marked up evidently means that they bring it up and vote for it in the Ag Committee, and they approved it. Now that Special Investigator Act, that was the one that gives subpoena power to the USDA on these investigations of the packers and things. We definitely need that. We got to enforce these rules. We can't say out of one side of our mouth that we want the laws that we already have to be enforced, like the old PNS regulations from 100 years ago that need to be redone. and we need to get this Cattle Price Discovery and Transparency Act done. But yes, definitely we need to get the laws that we have enforced. Well, we need the tools to get that done. And so unlike the National Corporate Beef Association that says we need to enforce those rules, they were heavily against this Special Investigator Act, sending out letters, threatening type of deals from KLA, TCFA, and NCBA. They were totally against it. Well, the House Representatives Ag Committee, they just blew that right off. They didn't even pay any attention to them anymore. I think they've tipped their hand that they are working more heavily for the packer than they are for the cattle producer, and I think Washington has seen that. And we've seen that the House or White House administration has endorsed these bills, and it looks like the House of Representatives is going to go ahead and maybe have a chance to get that passed also. They will vote on that now soon, that Meat and Poultry Special Investigator Act. It's not the Cattle Price Discovery and Transparency Act. We'll be looking for that to get marked up soon. We're kind of expecting that to get marked up at the Senate Ag Committee before the House. But that's a pretty good sign, the way things are going with the House Ag Committee there. And so it gives us some hope of getting something done. And getting something done, in today's turmoil, as much stuff that's going on with inflation going high, crazy, and everything that's happening. These poor people that's got these babies that are running short of formula. I remember it's been several years ago that I was out shopping for baby formula, but it was hard enough to find the right kind, let alone maybe if you figured out what kind you needed and couldn't get it. That would be a bad deal. But a lot of stuff going on. The border down south is wide open. People just pouring over. And here we're in the land of plenty. Well, there's not enough if you don't enforce these borders. And I got word from a guy that lives down in Del Rio, Texas, down on the southern border, was telling some people I knew that the restaurants in Del Rio, Texas, the government is coming in and cleaning the restaurants out, taking all the food that they prepared for the day. They're paying for it, of course, with your tax dollars and mine. But the barbecue shacks, the taco joints, all the restaurants in Del Rio, Texas, the government's coming in there, cleaning them out and giving it to these people that are coming over illegally. And in fact, your border patrol agents can't even get any lunch. Now, when I heard that, I was just shaking my head. But in this day and time, I guess you can kind of expect something like that, but it's really ridiculous. But over the weekend, I was able to go up to my old stomping grounds, St. Joseph, Missouri. I got to go to a sneak peek premiere of a movie or documentary movie called Sold. It's an American stockyard story. They had it at the Historic Theater, Missouri Theater in downtown St. Joe. They had a packed house at that, and people bought tickets, guys, and it was a packed house there. Saw a lot of the old stockyards guys. This whole documentary was about the demise of the stockyards, and not just St. Joe stockyards, but all over the country, and how times have changed and things like that. They did a very, very professional job. I got to commend the Coin in a Log creative production company there with my friend Drew Ames as the leader of that group, and he did a great job there. They all did a great job putting that together. Really enjoyed watching that. Got to see a lot of old friends, got to see a lot of people that traded at the stockyards locally there. They came to watch the movie. Saw a lot of stockyard people. Kelly Payne, the general manager of Oklahoma National Stockyards, was there on hand. I was glad to see her there. She's a real ambassador for competitive marketing in the cattle business, and she does a great job. She's getting out there, getting her voice out, going to events, going to things, really trying to keep that deal down. And although a lot of people don't consider Oklahoma National Stockyards to be a terminal river market, it is still the last old-time stockyard left, and it's going great. I mean, I think their receipts are up this year. They sure seem like it every week when I was reporting on them, but we can give a lot of the credit to Kelly Payne there and her family that's been involved with that stockyards for a long time. But let's talk about your board for last week. June live cattle futures on Monday was up $1.10, Tuesday down 17, Wednesday down $1.50, Thursday was unchanged, and Friday up 7 cents. With June live cattle futures ending the week at 131.57, that was down 50 cents. So, you can expect that we're going to have lower fat cattle trade whenever you've got a $10 plus basis there for your northern feeders. And sure $8 or more basis for your southern guys. And I've heard recently that over 70% of cattle feeders are hedged, and most of them doing it through that live cattle futures board there. But my goodness, how could they resist that? But when you get into a bastard month like we're in May here, we don't have a contract for May going off June, and it's so far out there it doesn't meet up. But nobody's really complaining because they get to take advantage of that basis, put that in their pocket. And then a lot of guys are reaching break evens or making a little money on the cattle, but we're losing market position all along, guys. So what it really hurts is the guys that are feeding cattle the next time, your backgrounders, your cow-calf producers, because we're losing market position and it's trickling on down the line. Your August contracts on live cattle, end of the week, down 80 cents for the week at 131.55. Now, May feeder cattle, Monday was down 47, Tuesday down 22, Wednesday down $1.32, Thursday down $1.72, and Friday down another 72 cents. Getting the trend here with May feeder cattle ending the week at 153.40, down 447 for the week. Just a free fall. And we know for sure, we're absolutely positive that we've got absolute dwindling numbers of available feeder cattle outside the feedlots. We know that. We know that our cow numbers are down. We know that our beef cow slaughter has been up huge. This is all going to turn soon, guys. Hang in there if you can. Now, we've got to get some leverage. Now, we'll have leverage in the calf market and the yearling market, but if we just had a little bit more leverage to hold some market position in your fed cattle market, it would sure help. That's why we need Cattle Price Discovery and Transparency Act, guys. How about August feeder cattle? All important August that I told you was down over $10.50 for 2 weeks. But hell, your expanded limits now are $10.50 for 1 day. At the last few days of the traded month, and then after it's hit the limit the day before. So I guess the guys in Chicago don't think that's too much. $10 a hundred. $80 a head, that can break people. But August feeder cattle ended the week at 163.92, down $4.10. Corn ended the week, all July contracts on the grains, 778 3/4, down just 2.5 cents. Beans 17.05 1/4, up 58 3/4 cents on beans. Kansas City hard red winter wheat ended the week at 12.52 3/4 cents a bushel, down 29 1/4 cents. Fat cattle trade through Thursday, 74,600, exactly the same as the movement the previous week, and a little better than the 68,300 the same week a year ago. But a lot of this trade is for 2 to 4 week delivery. A lot of trade that didn't get reported that we heard that was going on out there was basically cash, but it was beyond that 4 week delivery. It was going a month or more out, and so we don't get to see that, and it gets hidden in those other reports that are hard to read and got the big wide spreads on them, and confidentiality kind of filters everything out. But guys were selling cattle for mid to late June on there, so a lot of those cattle being sold, just setting up this market. I tell you what, I said a couple weeks ago they were going to take $10 off this market over the next month. They might take 20. They could take $20 off of it, guys. So they're going to take it all, and we're going to have to scratch and claw to get that market position back. But when you got guys basis jumping like crazy like they have, and you can't blame them, they've got to try to make some money. But it's just ridiculous whenever your weighted average for your live cattle sales is $9 from your spot live cattle futures trend this late in the month previous to your spot market. It's just ridiculous. But live sales, steers and heifers, $1 to $2 lower from 136 to 145. The weighted average on live steers in the 5-area feeding region, 140.26, down about $2 from the previous week. They're going to take $2 to $3 at least away from us every week, and maybe more whenever we get into these especially bigger numbers of cattle that were put on feed as calves. Your dress sales, $1 to $3 lower from 219 to 229. Weighted average on dress steers, 225.78, down about $3 from the previous week. Friday didn't have hardly any trade at all. What little bit of trade we did see late in the week was actually better than earlier in the week, as some of these small regional packers still coming in there buying cattle off the cash market there and wanting the better kinds. But Colorado didn't have anything confirmed on Friday. Only 1,000 head confirmed negotiated in Colorado for the week. Iowa, 300 head confirmed, 29,300 for the week. The only price on Friday was 140 dress. That was at the bottom. Their price range. Nebraska, no confirmed sales on Friday. Almost 23,000 for the week, which is pretty typical for them. Kansas, nothing on Friday, 14,300 for the week. Texas, nothing on Friday, 7,500 for the week. In the northern plains, basically, your fed cattle brought from 140 to 145, and dress cattle from 223 to 228. Your southern plains, 136 to 138 live. So, you know, $2 to $7 spread premium there between the northern plains and the southern plains, and not that much difference in the grading percentage, guys. Did hear several stories of guys or packers hauling cattle from Kansas up to Nebraska lots, and you think, my God, we got $5.50 diesel, and they're doing that. It would be cheaper for them just to raise the price. Well, they don't want to do that. They would rather pay the freight, and I think that's one of those stories that should be reported on Biden's hotline there, on if there's you know, kind of unfair trade practices going on. That would sure be considered one of them. Box beef cutout values, weighted average for last week on choice cuts, 261.03, up 408, and your late Friday sales were a little over $1 higher than that weighted average. Select weighted average for last week, 245.79, up 261. Now your late Friday sales on selects were a couple bucks lower than that weighted average. So we are seeing that choice select spread get wider, which it should right here. Grilling season, but up over $15 now, but only 525 loads of cuts, grinds, and trimmings. We don't see a whole lot of that trade on box beef. People think that's a save all and we should connect our fat cattle to it, guys. No, absolutely not. Nothing the packers can manipulate more than what they tell USDA that they did on their spot trade for their box beef cutouts. They put most of it in their own AMAs on the backside or in contracts going out. So we only see 525 loads of box beef for the whole week. All these plants, yeah, right. How about slaughter? 680,000 harvested, huge slaughter. We've been waiting for this. Everything lined up good. Best slaughter we've seen for quite some time. 23,000 more than the previous week, 8,000 more than the same week a year ago. Talk about your feeder cattle market. Your real-time index on DV auction ended the week at 150.01. That was down $5.35 for the week. That's your cash market based on an 800-pound steer up through the middle 12 states, just like your CME index. But the CME index is failing to fall. It was $3 higher than that, and I know what it is because your markets were sharply lower late in the week on those yearlings, and you got a human factor in there. Those market reporters, most of them untrained, are not putting the cattle in there. They're throwing them down in the number twos or somewhere that they're not getting reported, or they're not putting them in because they're not used to seeing those prices. It's going to take them a week or so of seeing those prices down in the 130s on 8-weight steers and putting those in and pulling that weighted average back down. But you got that human factor in there, and I don't think we should have the human factor. We might as well use that real-time index that's automated, and the computer does not have a conscience. Your cash feeders in your auctions last week, feeder steers clung to steady or tried to cling to steady the first couple days of the week and then plunged $3 to $8 lower late. Feeder heifers were even more lower. Calves were very uneven. Soft ballers were lower again. Hard weaned calves ready to turn out, stalker type calves, sold fully steady. Stalker yearlings, heavy 6 and light 7 weight yearling stalkers, where you could find them, sharply higher again. How about some quotes out west? Turlock Livestock Auction Yard, Turlock, California. 3,500 head for the special feeder cattle auction there, and they're doing a really good job. I had a pretty good market, especially you figure where they're located, but look at your best tested weights on this automated market report from Cattle Market Central. 425 head, 5-weight steers in Turlock, California, average 554 with a weighted average price of $175.81. 1,066 head of 6-weight steers in Turlock, California, average 654 with a weighted average price of $165.86. On the heifer side, 574 head of heifers in the 5-weight category, average 547 at $163.58 for the weighted average. 652 head 6-weight heifers, average 634, the weighted average price of $154.87. Complete stick out deal in Turlock was 241 head, 626 pound stalker steers, bring $179.50, guys, and it's dry in many areas out west there too. How about your top quotes for the day? I'm going to give you 3 of them from the same market. Your Row top quotes for the day come out of Valentine Livestock. I didn't get the quotes till late last week, but on Thursday last week at Valentine, Nebraska, they had the Jack King Hereford steers. 58 of them weighed 809 at 164. How about the Haas steers? 67 head, 726 pound stalker steers, bring 196. And the Coble cattle, 88 head, 648 pound stalker steers at $217.50. That's your feeder flash for Monday.